Okay, so the markets are hitting all-time highs, guys. It's July 1st, 2019. And the question of the day is, I've been getting a lot of you traders asking me a question. Leonardo, fine, you've nailed this one. You told us the market is going to all-time high, and it is July 1st, 2019, and the markets are hitting all-time highs against all the odds, against everything that we have been watching in the general media. So the question is this, guys. It's not important what the markets are actually doing today. What is important is what the markets are doing next. So ultimately, in this video, we're going to share with you specifically what will be next, because knowing the next move of the market is what actually helps you make money as a day trader, as a swing trader. And by the way, guys, I know in some of the videos you've seen my face, and look, for the next 60 days, I'm going to be committed. Instead of showing you a ton of charts, a ton of little crazy little things out there, I'm going to focus on really answering a lot of questions that I didn't get to answer over the last few months that a lot of our subscribers here on YouTube had. So guys, with that, make sure that you are subscribed. Make sure you hit that notification bell so you wouldn't miss out any videos that are coming over your way over the next 60 days. Now, with that said, yes, the markets are hitting all-time highs, and it's actually quite easy to be a bear. It is quite easy for me to be a bear because, you know, most of the trades that we describe in this channel, most of the trades that we describe in the 13 Market Moves Daily Analysis, which is focused around our 13 Markets Move formula that tells us the sequence of the market moves, ultimately predicting what the next market move is going to be. A lot of times we focus on the trades, because we do trade weekly options, on strategies when stocks drop. So it's naturally very easy for me to be a bear. However, over the last couple of weeks, we have been specifically been focused on promoting, bull trading strategies. And I know it's very tough to be a bull after the market has failed you for the last 4 times in the last 24 months. And meaning 4 times where the market has actually hit all-time highs and has failed to break out higher. Now, over the course of the last couple of weeks, we've posted multiple videos showing you the really cool pattern that is known to everybody that's trading out there as a cup with a handle. And we've shown you a ton of charts basically describing that the charts are screaming that the markets was going to break out to all-time highs. So if you're not familiar with charts, guys, very simple. Click the links below. Take advantage of our charts, divergences, and patterns recognition course. It's going to make your life as a trader a lot easier this year. Now, with that said, besides the chart patterns, what we specifically focus in is what most of the people never focus on, and that is the patterns in institutional behavior. It's quite simple, guys. If institutions are selling, what do you want to do? You want to sell. You want to buy put options. If institutions are buying, what do you want to do? If we can zoom in on the charts and we can show you that institutional behavior is such that they keep buying every dip in every sector and they keep doing it again and again and again, and we can specifically point this out on the chart for you. What should you be doing? You shouldn't be buying puts. However, a lot of guys that I have talked to today on July 1st are buying puts. Stop buying puts in this type of market environment. Guys, there's too many variables in the market, but markets are very rare, and this is why I'm taking the time to record this, because this type of market environment does not happen very often. And here's what I mean by that. When charts and institutional behavior and the macro environment combined screams that market is about to break out to all-time highs, it's very easy to simply buy calls and just be very patient, because remember, as discussed in many prior videos, markets do take significantly longer to climb and grind their way higher opposed to them just dropping. So the answer is simple to the question of actually what is coming next. And it is actually absolutely incredible. If you've been watching this channel for some time, remember about 8-9 months ago, I have posted a video that was titled Market Sequence 666. And that particular sequence, based on our 13 markets move formula, has predicted that the market was going to drop, and it did drop like a rock, creating the lowest point on December 24th, 2018. And just when everybody turned into a bear, we have actually posted a video on the channel saying that the market will move higher for the next 6 months. And so we're recording this video today because it is officially has been 6 months since we have posted that video correctly predicting the continuous rise in the markets. So the question is, what is next? What you're about to see next in the markets is absolutely going to blow you away, because nobody's talking about it. Nobody's talking about the markets going to, 50% higher from here, which we're not saying that either. But we are saying that the market could easily go 20, 30% higher from this very point today, when the markets are trading at all-time high. S&P currently is at 2950, 2960. And it clearly made a pop, which makes a lot of bears celebrate right now, but that celebration is going to be over rather rapidly. I understand it is very easy to make a case. The last few G20 meetings, this behavior have been such. After the G20 meeting, the market actually pops higher, and then it begins to sell off literally that day or the next day. What we're observing right now in our 13 markets move formula is exactly the opposite of what has taken place when we placed the video titled Market Sequence 666, predicting a huge drop. What we're about to witness at the completion of today, which I'm recording this on July 1st, about midday, when the markets did pop and it looked like they were coming down again. So I know a lot of bears were getting excited, which I am a hardcore bear, but I am not buying this sell-off. This sell-off is actually a buying opportunity, because the markets are about to break out to all-time highs yet again. And specifically when is this Friday, because the job report that is going to come out, it is going to be a weak job report. And I know you're thinking, hold on, if the job report is weak, why do you say that the market is going to go to all-time high? It's simple. It gives the Federal Reserve the ammunition to actually cut the rates, okay? And let's be very specific here. After this weekend, the reason the markets are selling off, the reason the gold is actually dropping today, because some investors clearly believe that the Federal Reserve, after the continuation of a deal, after Trump and Xi actually going to renegotiate the deal one more time, after everybody thinking that this trade deal is actually going to materialize, that actually gives the Federal Reserve less ammunition to chop the interest rates. Now, it's not necessarily the trade deal that is going to make the Fed lean one way or the other, but they specifically pointed out that it was the data. And the next crucial point in the data we are going to receive is going to be this Friday at 8:30 in the morning. 8:30 in the morning, expect some crazy volatility in the markets. And I know that doesn't even sound right, because look, we're talking about July 4th. Leonardo, you really think there's even going to be any traders there on Friday to move the market substantially lower or higher? Guys, this job report is going to be of historic value, because it will propel the markets to all-time high. The job report is not going to be hot, and it is actually going to give a reason for the Federal Reserve to chop the rates. So what do we have now? We have clearly further breakthroughs on the China negotiations, and now, as it seems to a lot of bears, and that's why the gold again is selling off today, as if now the Fed does not have the reason to cut the rates anymore. We will get that reason this Friday. So, and if we look at the history, if all the time frames throughout the history, when the Federal Reserve, just as it had in the last few years, had continually increased the rates and then it paused, it creates an environment for the stock market to actually rally. Now, clearly nothing can rally forever, but in the last few videos, we have revealed our examination of the market, where the market behavior clearly is identical. Even when you look at the day-to-day basis, it highly resembles the market environment of December 2017 and January 2018. And on the chart, we clearly see this major breakout higher that does not last very long, but it does last for a good 60 days, which propels the market almost 10% higher. So what we are saying, over the course of the next 60 days, we could see the markets substantially higher to the magnitude of 9 to 11% higher from here. And if that's the case, we could see S&P 500 trading as high as 3,300. Now, we've made the case as far as the chart goes a few videos back, so if you haven't checked those out, just make sure and review those. There's probably some links going to be at the end of this video. But the most important thing is this: very rarely in the history of the United States market do we have such favorable Goldilocks conditions where clearly the Fed is looking to work in order to cut the interest rates, and other things are lining up as far as the charts, the couple of the handles, that is basically everywhere, the reverse head and shoulders. Very rarely do we get an environment like this. So if you are still a bear, guys, this is a perfect time to turn and be a bull for the next 60 days. And ultimately, the reason I'm so excited about this, guys, because if you study the environment in December 2017, December and January 2018, clearly what happens next? A huge drop-off takes place. Magnitude could really barely seen in history, where the markets are dropping 600 points, 700 points, 1,000 points on certain days. So that is coming, and that is the good news for the bears. The most important thing, it is not coming this week, it is not coming next week. As a matter of fact, if we examine the history of the market environment around July 4th, which is going to be this Thursday, in about 72 hours is going to be July 4th. And happy July 4th to everybody, by the way. But the only exception to the rule was last year when we made a prediction that VIX was actually going to spike and going into the July 4th weekend, and it historically was one of the officially highest VIX environments ever. The VIX actually hit 19 going into July 4th weekend. Now, we consider that an exception to the rule rather than rule, and so what we're looking is for the VIX to continue to drop off here. If you watched our last video, we made a clear prediction, specifically pointing out the triple top formation in the VIX, saying it's going to drop from 16 all the way to the 13 handle, and clearly did so today. Pre-market, the VIX was trading at 13.8, currently trades in the 14 handle. We're saying the VIX is likely to even go lower from here. And if we do go lower in this low VIX environment, guys, there's two things that I want to share with you about this environment. Number one, it does not pay to day trade. You want to transition from being a day trader into a swing trader. You want to buy your options contracts that don't expire on a weekly basis, but rather give yourself a little bit more time on your contracts, meaning instead of typically if you're buying weekly contracts, buy contracts that expire the following week, buy contracts that expire in 3 weeks, 4 weeks. Why? Well, simply because as the market grinds its way higher, it's going to take a little bit longer. And just because the markets overall are going higher does not mean that you're not going to get any red days in between. So I'm wearing this red short, guys, to remind you that even though we're exceptionally bullish on the markets right now, there are going to be some red days. If you examine the market environment in December 2017, January 2018, there's been some incredible moves in the markets moving higher. However, there were also a few days where the markets were substantially in the green. Okay, guys, so very rare in the history do we get a combination of all these things come together to create an opportunity for the market to go to all-time highs. Speaking about the VIX again, right? So the VIX typically drops off, and we're expecting the VIX to continue dropping going over the next couple of days into the July 4th on Thursday. And when the critical data on these job reports does come out at 8:30, do expect, because of such critical value of this job report, that the traders will be there and they will trade the hell out of the market this Friday. So Friday is an excellent opportunity for day traders, but overall, when the market grinds itself higher, there's going to be some green days, there's going to be a few red days in between. You're overall increasing your time frame, and you definitely want to stay on the bullish side. So if you'd like to learn more about this, we're actually observing something we have not seen in a very long time, which is exactly the opposite of the video that was posted 8-9 months ago, the 666 video. We're predicting that the market is absolutely going to explode this Friday going forward for about 60 days, because our 13 markets move formula is showing us a very rare sequence, 777. Yes, the market have not closed yet for the day. We're in the middle of the day on July 1st, but everything is pointing to a move 7. And for those of you that are not familiar with all the 13 market moves, guys, click the link below, educate yourself on what these moves are, which actually is a combination of chart patterns and probabilities combined in a special formula to help you make sense of the market as a day trader or a swing trader. So with that said, guys, get ready. There's going to be some awesome times to be a bull right now, followed by even better times to be a bear. The main message here is don't be a bear quite yet, because there's going to be some incredible time to be a bear in the near term, in the next 60 to 90 days. So with that said, guys, hit the notification bell. We are going to specifically reveal some details about this move 777 once it is officially confirmed today. And we're going to talk about some specific trades, bring some specific details to some of the answers that you guys have. If you have any specific questions that you've been wanting to answer as a trader, just put them in the comments, and we're going to try to answer as many questions as possible over the next 60 days. Thank you guys for watching. Trade like a rock star, make it happen. I'll see you guys on the next trade tomorrow.